Hello and welcome to Business Incorporated. I'm Ladi Williams. Let's take a look at the headlines. New tax policies in Ghana to take effect from May the 1st. And South Africa's rand strengthens to pre-pandemic levels. And Egypt discusses second phase of structural reforms with World Bank and AIIB. I'll begin midweek's show with the market numbers. Here on the African continent, South Africa's JSE declined 0.31%, while Nigeria's main index closed Tuesday's session positive. Also in the region, the EGX 30 advanced 0.35%, and Kenya closed Tuesday's session positive. And investor sentiments in the Middle East were negative. At intraday, the Abu Dhabi index declined the most by 1.53%, while Dubai's index lost almost 1%. Elsewhere, the Qatari index shed 0.68%, and the market in Saudi Arabia wasn't changed. And European stocks were higher this morning as investors digested new earnings reports and economic data. Let's talk to Ashutosh Pandey now for more developing stories from the European scene. Hello, Ashutosh. Great to have you.
Hello. Thanks for having me.
Yeah, so the European Union has reached a provisional agreement to reduce its net greenhouse gas emissions by at least 55% by 2030. Can you tell us more about this agreement?
Well, absolutely. It's a major boost. Earlier it was 40%, so now the target is 55%, though many would have liked it to be around 60 to 65%, and they feel that it's not ambitious enough. But it's a good start, a good beginning, because if you see that in 2019, the levels were already down by 24% compared to 1990. So clearly, we were pretty much on target as far as the old target of 40% was concerned, so it needed to be more ambitious, so now 55%. And this basically sets the ball rolling for stricter regulations on CO2 regulations in the bloc, as well as on imports from other places. So we could see strict CO2 emission targets for the auto industry, perhaps stricter than what they are right now, and also a border tax on imports from countries which do not have as robust climate laws as say the European Union. So that's going to be one feature. So basically this law is now setting the stage. Importantly, this law actually puts a lot of emphasis on reducing emissions and not necessarily absorbing emissions. So there is a limit on how much of absorption of carbon would be counted against this target vis-a-vis how much of reduction you can bring about by actually cutting down emissions. So there is a limit on absorption of carbon, and that's the reason why there is this focus on basically cutting down emissions, cutting down on more polluting industries. So yeah, it's quite a welcome step.
Okay. Well, the Super League is still in the news today, and it seems to be crumbling within days of its launch. All 6 English clubs involved have pulled out following a huge backlash from the fans. How are investors reacting to this?
Well, to begin with, the shares in those companies, those clubs that are traded on share markets are actually, stock markets are down. So to begin with that. So clearly, if you look at it, investors are basically looking at returns, right? So when they saw this proposal of a Super League, they saw, oh, wow, there was a good investment proposition here because the biggest names are going to play, the Messis and the Ronaldos, and there was a potential for a better broadcasting deal. And that's the reason why back then, 2 days back, the shares in Juventus and Manchester United, they just soared after this launch. But then clearly fans had other ideas. They view the sport differently. They're more passionate about the game. The game that is played on the pitch rather than in boardrooms. They care about the solidarity that it shows, the diversity that is there on display, and also these underdog stories. And clearly, that is what, in the end, won here.
All right, let's look at the vaccine saga now. Johnson & Johnson will restart deliveries of its COVID vaccine after the European Union's drug watchdog. The EMA said the benefits of the vaccine actually outweigh the risks. So this is after the agency found a possible link between the vaccine and a rare blood clotting issues in adults.
Yeah, absolutely. And this outcome is pretty much similar to what we saw in AstraZeneca's case, where the EMA did again find a link between the vaccine and the blood clots, but said that it was worth the risk. The vaccine was worth the risk. The benefits far outweigh the risks, and that's why it did not ban the vaccine. And it's the same here. So this basically means that there is another vaccine in the mix. We can expect a faster vaccination drive, and the faster we come out of all these restrictions. So that's a definite positive, but there are concerns around vaccine hesitancy there. Not sure how many people would be willing to take this shot, given that it is linked to blood clots. So that's one of the worries, and that is something that we would have to watch for later. And there could be potentially a scenario where we see that the vaccines are restricted to certain age groups, as we are seeing in the case of AstraZeneca, or based on perhaps even gender, because the blood clots were mainly limited to women. So these are some of the things that we'll have to look out for, and it's not yet clear.
All right, so we'll keep checking that. Anyway, thank you for the updates and enjoy your day.
Thank you.
All right, so in the UK, figures just released show the annual consumer prices index rose to about 0.7% in March, up from 0.4% in February, with transport costs making the largest contribution. Let's talk to Juliana now for updates from London. Great to have you, Juliana. You spoke to Inni this morning about the UK inflation figures. How are the markets reacting this intraday?
Yeah, it's pretty positive response. The FTSE opened up in positive territory in early trading. It still remains in the green at intraday. As you said, we got the inflation figures for March up from 0.4% in February to 0.7%, marginally below what some analysts had expected and still well below the Bank of England target, which is about 2%. There are a little bit of fears about where this upward trajectory could go. I think the Bank of England definitely expect inflation to hit at least 1.9% by the end of the year. But if you consider that this figure is only March and non-essential retail opened in April, I can tell you, Laddie, I've been digging through the sales trying to get you something. There are no sales. Prices are pretty high, and clothing is one of the main reasons why it is at 0.7%. Once you do take in April's figures and you take into the fact that the regulator, the energy regulator here in this country, Ofgem, has increased their cap tariff for the price of energy for the month of April, we could see inflation potentially spiraling out of control. Who knows? But if we have a look at the numbers, the FTSE All-Share is up 0.04%, the FTSE 100 is up 0.11%, and the FTSE 250, the domestic market, is down at intraday by 0.18%. In the currencies market, the British pound also down on the US dollar by 0.07%, up on the euro by 0.17%, and down on the Japanese yen at intraday by 0.01%, Laddie.
All right, looking at the FTSE 100, Just Eat was the top faller this morning, down about 4.5%. Any reason for that drop?
Yeah, it's an interesting story. This follows a report that was first published in the Financial Times a few hours ago, talking about Ubereats. Now, we know Ubereats is a huge rival of JustEatTakeaway.com. They pretty much have got the stamp on the US market, and they have announced that they will be joining what is the fastest growing European market for ride-hailing apps, and that's Germany. They haven't been in Germany And so for several years, JustEatTakeaway.com have really dominated that market. And now Ubereats say they are planning on entering over the next couple of weeks. This is scared investors, which is why we saw that mass sell-off of JustEatTakeaway.com. This is, though, going to be a test for Ubereats. They have that landmark Supreme Court case, didn't they, just over a month ago here in Britain. And that transfer of considering their riders as self-contractors working in the gig economy has now transformed into them actually being workers. And they are going to be workers under this new regime that's taking place in Germany. So, yes, that's the reason why Just Eat Takeaway shares are down, because they've got stiff competition coming.
Definitely going to be big competition there for Just Eat. Well, the Office for National Statistics reports that UK average house prices increased by about 8.6% in February compared to a year ago. What's driving this?
Yeah, as I'm sure you know, Laddie, it's not cheap to live in London, and it's not cheap to buy a property. If you want to buy a property outside of London, it is going to cost you £250,000. If you want to live inside the capital, you're going to have to double that to about £500,000. And this is what this data is confirmed. We already know this, but there certainly is a spring surge that started pretty much this time last year, when it was one of the first sectors to be given the green light to open. Of course, there are so many subsidy schemes that the government have been running. One of the most popular is the cancellation of the stamp duty tax. That set new buyers and other buyers back thousands and thousands of pounds. That's no longer in place up until the end of June. A lot of buyers are rushing to try and get their hand on a new property before that time. Also, as well, during the Chancellor's spring budget last month, he did announce that he would be offering this 5% mortgage scheme. Pretty controversial, but for some people, it does turn them from being a renter to a buyer. Those schemes have started. So there are so many reasons why people are rushing to buy a new property. The only issue is, of course, you know, the demand is greater than the supply. And there are some individuals, I believe I did discuss this earlier in the week with Innie, that are concerned that the government is trying to profit from this moment rather than using the opportunity to take care of some pretty derelict housing that we have out and about in London and around the inner cities of the United Kingdom.
Okay, we'll keep tracking and see how that goes. Anyway, Juliana, thank you for the updates. Always great to talk to you.
Thank you.
And now stocks in Asia Pacific largely fell today. A surge in coronavirus cases in countries like India weighed on economic outlook and investor sentiment. In Japan, the Nikkei 225 dropped about 2.03% to close at 28,508 points. Its second straight day of 2% decline. While the Topix index slipped 1.98% to finish the trading day at 1,888 points. South Korea's Kospi shed 1.52% to close at 3,171. Hong Kong's Hang Seng index fell 1.68% as of its final hour of trading. In mainland China, the Shanghai Composite ended the trading day flat at 3,472, while the Shenzhen Component bucked the overall trend as it advanced 0.34% to close at about 14,151 points. Shares in Australia declined on the day as the S&P ASX 200 fell 0.29% to 6,997 points. MSCI's broadest index of Asia Pacific shares outside Japan fell 1.1%. And stock futures were little change in early morning trading amid a sharp decline in Netflix shares. S&P 500 futures hovered below the flat line, while Nasdaq 100 futures traded in negative territory. Futures on the Dow Jones Industrial Average were marginally lower. Netflix shares plunged about 9% in extended trading after the streaming giant reported subscriber additions that fell far short of Wall Street estimates as demand surge from the pandemic has started to fade. Wall Street suffered back-to-back losses as reopening plays led the market lower amid renewed concerns about rising new COVID cases globally. Meanwhile, oil prices fell for a second day in early trade, weighed down by concerns that surging COVID-19 cases in India will drive down the fuel demand in the world's third biggest oil importer. Brent crude futures for June declined 0.4% to about $66.28 a barrel, while U.S. West Texas Intermediate crude futures for June fell 0.5% to $62.33 a barrel. India, the world's third largest oil user, reported another record increase in the daily death toll from COVID-19 at 2023 and another record rise in cases, more than 295,000, further battering the market. Data from the American Petroleum Institute Industry Group showed U.S. crude oil and distillate stocks rose in the week ended on April the 16th. And do stay with us. We'll bring you more stories after the break. That's in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated. For a while now, Ghana's risk-to-debt burden has been classified as being high due to the country's incessant borrowing and growing debt profile. Earlier this week, credit rating agency Moody's ranked Ghana's economy B3 with a negative outlook, saying the country has high exposure to external financing. Let's talk more about Ghana's debt with Alabi John Kennedy, a managing partner at Bespoke Business Consulting. Hello, Alabi. Great to have you on the show.
Hi, good afternoon.
Good afternoon.
Thanks for having me.
Yeah, so let's begin with your reaction to Moody's latest credit analysis, placing Ghana's economy on a B3 with a negative outlook.
Well, the analysis didn't come as a surprise, even though on the political front here, there's been a lot of argument that it shouldn't be. The rating it's a bit low, and they want institutional body to understand what goes into some decision that was made by government to borrow, and to be able to help facilitate the recovery of the Ghanaian economy from the COVID-19. But let's call a spade a spade. That's the real situation on ground, and the excessive reliance of the government for internal flow of income, it's a bit worrying, because it looks like you are not able to generate enough revenue. There's a lot of revenue underperformance in the economy, and that is what is mainly affecting the economy as a whole. So basically, it's right. It's what the government should strategize and find ways and means to address, so that we can move the economy forward in a very fast pace.
Interesting. Comes as no surprise to you. Well, the report states that access to more reliable power supply will bolster the government's industrialization strategy. What is the current power situation in the country, and what areas will be greatly impacted by an improved supply?
Basically, it has not been encouraging compared to before the election was held in December 2020. We enjoyed more stable power supply before the end of the year 2020. But from January to now, there's been serious power cuts, and the citizens are not happy. They've been talking to the government and asking why the fall of power energy within the economy, and the government is trying to tell them that, okay, now we are trying to move away from the import-led economy to an industrialized level of economy, where you are going to actually depend on our own industries to feed on exports, to feed the nation and export to other countries. So basically, if you need to industrialize the economy, you need more power. So they are trying to expand. So the process of expanding the power in the country brought the issue of power cuts. And you could see there are instances where you see power lines are being expanded. There's been importation of some power grids and all that. So basically, I think we are looking at a short-term power cuts, and going forward, maybe to the next quarter or to the third quarter, there should be a stable power supply. And this will actually affect the businesses. There's been an institution where you have the one district, one factory, where every district is supposed to have a factory that can feed the nation and export to the other countries. So basically, they are trying to make sure that these small industries are able to gain and understand how they can utilize the power that is being expanded to their own benefit and help to generally grow the economy. Okay. So basically, it's what you are worried about, but it's also helping.
Okay, before I let you go, what else should the government be doing to manage the debt situation in the country?
Wow, the issue of debt is very worrying. Debt is actually a huge liability on the government. And I know the government is smart enough to be able to find strategies to manage the debt. One of the main things that the government should do, as per advice, is to make sure they reduce interest rates. If you're able to reduce interest rates, people will be able to borrow more and do more businesses and expand their business and in turn pay taxes. So this could also go a long way to help. Secondly, I also advise that there should be strategies in place to be able to block all the loopholes that is affecting revenue generation. There's so much holes in which you are not able to get more revenues as expected. So if the strategy is to block the loopholes, at the end of the day, we're going to generate more revenue and be able to meet the demand of the nation. And you're also looking at negotiations. If the government is able to strategize and negotiate the terms and conditions of these loans, of these debts, maybe they can even get a reduce in interest rates for those debts, or they can be able to negotiate and see if they can get a forgiveness from other rich companies where they've gotten or they borrowed from. So this can also help. Then the issue of exchange rates, if the exchange rate is actually maintained for a very long period of time, it also affects the possibility that they can be able to manage the debts in the long run. So I'm sure the government they are smart enough to get this done, and this will go a long way to help.
All right, Alabi, thank you so much for your time on the program today. Alabi John Kennedy is the managing partner, Bespoke Business Consulting. Thank you so much. Well, still in Ghana, the implementation of the new tax policy announced in Ghana's 2021 budget statement and duly approved by the Parliament will take effect from May 1st, 2021. According to Ghana's Revenue Authority, the implementation of the new taxes, which include the COVID-19 Health Recovery Levy, the Financial Sector Recovery Levy, and the Energy Sector Recovery Levy, and the Sanitation and Pollution Levy, is expected to help in rebuilding and strengthening the country's public finances, deliver critical government services, and support the transformation of the economy, among others. COVID-19 Health Recovery Levy will see the imposition of a 1% levy on the supply of goods and services in the country other than exempt goods or services and importation of goods and services and instead of exempting imports. And South Africa's local currency, the rand, has been strengthening against the US dollar, the euro, and the British pound over the past 4 weeks, seeing it reach levels which were last seen pre-pandemic, trading at 14 rand to a dollar. Economist Moses Kusana says there are various factors which have seen this upward trend, with global vaccination rollout processes performing better than expected and drop in COVID-19 cases being key in surprising the markets.
Big main theme that was playing out for the last month, predominant main theme, was the fact that we saw rising bond yields in the US, specifically developed markets. And the reason for that is basically the vaccine rollout and also the drop in cases for COVID surprised the market. So it was a whole lot more positive than what was anticipated. And then therefore, that converts to the American or developed markets recovering much quicker. So with the equity markets being anxious about the inflation starting to pick up again, basically saw rising bond yields, and therefore you saw the rand strengthening quite a lot. And with the rand strengthening quite a lot, you also saw commodities doing quite well. And also, and there's other factors such as the ruling of OPEC to extend the oil cuts by another month.
And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.